Great. So first we are going to look at this May 2016 question number 1C. May 2016 question number 1C. Chigiri Limited. We are told that Chigiri Limited is a private company which intends to be listed in the security exchange. The company has recently made a dividend issue of 3.2 per share, shillings per share. The dividend is expected to grow at a rate of 15% per annum for 2 years, and then grow to 12% per annum for the next 3 years. Thereafter, the dividend will grow at a rate of 6% per annum indefinitely. The required rate of return is 11%, and then you are told to get what? The intrinsic value of the share. And that question could earn you 6 marks. So, as usual, class, can you tell me where is this question coming from? From which topic is this question coming from? Somebody? From which question or topic? From which topic is this question derived from? That is our start point. From which topic is this question derived from? One, waiting to see your response. From business valuation, that is company uncertainty. So from business valuation, Chigiri Limited. From business valuation topic, and we need to compute or to get what? The intrinsic value. So today we are trying to remind ourselves the intrinsic value computation. And this one, if you look at this very well, it's under ordinary share. Therefore, I need to get a present value. So I have the years here. I have the D1. Who can remind me how we get the D1? How do we get D1? How do we get D1? How do we get D1 plus D1? How do we get expected dividends? Expected dividends. D1 is expected dividends. How do we get D1? Summary. D0 is the current dividend. I'm waiting. Something. Company has something. D1 gotten by D0. 1 plus G. Then we shall be getting the present value. We shall be discounting using which percentage? Which is the percentage here. The cost of capital from that end we got 11%. 11%. Okay, we get the present value. Of course, the summation of that will give us the intrinsic value. So in this case, I have I've been told that this dividend is expected to grow at a rate of 15% per annum for 2 years. So year 1, year 2, the dividend will grow at a rate of 15%. So year 3, year 4, year 5, this dividend is growing at which rate? Plus dividend for years 3 to 4 to 5. The dividend is growing at which rate? At which rate? 12%. It will grow at a rate of 12%. Then I have year 6 to infinite, which will grow at a rate of 6%. So the growth rate for that is 6%. It's always good to indicate that way, so that we'll be in a position to do what? To get that. So we need to get our D1 and we have our D0. What is our current dividend class? What is our current dividend? What is come from that end? What is our current dividend? It is 3.2. That is our current dividend. This is what we are growing. We need it to grow. For the first year, it's growing at a, so it is 3.2. It will grow at a rate of 15%. 1 plus R. That is 1 plus 15%, which is 1.5. So what will be the value after the growth? Value is about that is 3.2 times 1.15. It is 3.68. Asante, 3.68. Then the second one, now it will be this. This will be the current dividend in the second year. 3.68 is the current dividend. 1.15. The growth is the same for the 2 years. What will be our growth now? What will be our growth now for the second year? Second year, itakuwa ngapi? Change value. Just give me the value. Just give me the value. Just give me the value. It is 4.3223. 4.323. 4.23. 4.23. Asante. 4.23. And then 4.23. 4.23. Now is growing at a rate of 12%, so 1.12. So now for that year, it is growing at a rate of what? At a rate of 12%. So what will be our value here? 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 Takuwa gani? 4.74. 4.74. 4.74. Then year 4, we have 4.74. It will grow in the same rate of 12%. Itakuwa ngapi? 4.74 sante. Now this one will grow at the same rate of 12%. So itakuwa ngapi? Year 4. 5.31 asante. 5.31. 5.31 grow at the same rate of 12%. Itakuwa na ngapi mwisho? The second last, it is 5.95. 5.95. Who can remind me how we get the D1 the D1 for infinite, the D1 for infinite, D1 for infinite. Who can remind us? There is a nice formula. That we apply to get the D0 or D1 for infinite. I hope you remember. We look at the previous year. In this case, which is our previous year? Which is our previous year? The D not for our previous year is year 5, right? You grow that plus G, then you divide by what? K minus what? Minus G. That will be our D for that. Asante. This is our LBs. Yes. So previous year is this 5.95. Asante. Hapo ndio watu wengi wanakosea. 1.G is 6%. You see, the G at infinity is 6%. And then you divide by what? K is 11 minus 0.06. So who can give me that? Who can give me the value there? That will be very important for me. Nipatie hiyo value ya our 6 to infinite. Yeah, 6 to infinite. Tutakuwa na value hapa. Pata ngapi? 126.1 asante. 126.1. Now, class, I would like to know whether we are together up to that point. Some people are getting 121. Can you confirm? People are getting 121. Is it 121 or 126? Remember here we have 5.96 times 1.06 divided by the difference between the two. It is confirmed. It is 126.1 for asante. 126.1 for asante. Up to that point, class, are we together? Are we sailing on the same boat? Are we together up to that point? Are we together? Up, hadi hapo. Kwa pamoja. Shida inakuwa hapa. Kumbuka hii. Unaona hapa? Inakuwa shida. Are we together? I'd like to get more confirmation. Whether we're together, we get more confirmation from you. We are together. Then we move to the next part. Asante. Now, let's get the PV 11% for 1 to 6 year to the 6th year. So this will be 0.1. This is just 1 plus R raised to negative what? N. 1 plus R raised to negative N. Patia kwanza, itakuwa 0 point. Give me the first one. Give me the first one. 4 decimal points. Sorry. 4 decimal places. 4 decimal places. Ya kwanza ni ngapi? Four decimal places ya kwanza ni ngapi? Four decimal places ya kwanza ni ngapi? Haya, tunangoja sana. Tunangoja. I'm waiting for you to give me PP 1 plus R. R is 11. 11. Okay, so you guys, you are giving. I think my computer ilikuwa imehang kidogo. 9009. Asante. 9009. Ya pili. Give me the second one. The second one. Ya pili. The second one class, ingapi? The second one ingapi? 8116. 8116. The that one. 7312. 7312. The fourth one, almost done. The fourth one, 6587. 6587. The fifth one, tano. 5935. 5935. Ayasita, I want somebody to guide me on how I get the sixth one. Ya mwisho, pia infinite. How do I get the sixth one? Nilikuwa tunasoma hapa. Asante. You draw the one for the previous year. No, now you just draw. See, you drop asante, you drop down. Let's get the present value, then you get the summation to get the intrinsic value. So give me the first one. This times this. Ya kwanza ni ngapi? This times this. Ya kwanza ni ngapi? I like that. Ya kwanza to 2 decimal points. To 2 decimal points. 2 decimal points. 2 decimal points. 2 decimal points. 3.32 asante. 3.32. Ya pili. Second one. Let me get the second one. Yes. 3.43. Okay, that one. Yes, it is 74.8 asante. 74.8 asante. That is good raise asante. Next one. Yeah, okay. Just fit these times, please. Nipatie hiyo. Ama nimehang. It's okay. It's very okay. It's very okay. It's very okay. So give me this. 3.47. Okay. It is 3.47. 3.47. Then give me this. 3.47. We are almost there. We are mainly with 2. The menu is 2. 3.49. And the last one, that is 3.50. Okay. 50. We given 50 hapa 53. 50. 53. 50. Give the total summation. Do the summation. Total. That would be that. The intrinsic value. The intrinsic value. Summation. Say that business and business what? Business valuation. Unapata ngapi total? The total 92.1. 92.11. That is the intrinsic value. The intrinsic value. value. So intrinsic value. That is the intrinsic value. That is the intrinsic value. And I would like to know whether we are together up to that point. Then for those who are joining us, this concept under this evaluation topic, I think that is topic number 5. GBD Limited, tested in May 2016. It was question number 1C. This is the solution. Are we all together? I wish that everyone can confirm that we are together. Are we together? Are we together? Are we together, class? Are we together? Just confirm. If we are not together, please let me know so that I can repeat. That is our okay. All the rest, okay. Anyone with a question regarding the same? Right? Asante. Good. If we are together up to that point, I can send you to the same paper, question 2C. The same paper, question 2C. The same paper, question 2C. Question 2C. Question 2C. In the same spirit of the business valuation, in the same spirit of business valuation, question number 2C. Are we there? Are we there? It's about James Chiwende. James Chiwende. Are we there? It's considering the purchase of 4-year, 1200,000 per value bond. The bond has a full interest rate of 10% per annum. Investors require rate of return is 8%. What you require is the current value of the bond. The current value of the bond. Current value of the bond. So class, at this given point, this examiner is trying to ask you the market value of the bond. This examiner is still trying to ask you the intrinsic value of the bond. The intrinsic value of the bond. Market value of the bond. Market value of the bond. Market value of the bond is given by the formula. Interest times PV. Interest times PV. Please finish for me. Interest plus PV times PV, or the present value of the interest plus what? Summary. Tuition concepts. These are concepts that work with economy to know media. This topic has a very small things and they matter. PV for what? Redemption value times PV. You guys are good. Yes. Redemption value times what? Times PV. So we say that it's redemption value times PV because this will be redeemed 1 at the end of the maturity period. At the end of the maturity period, the redemption value will be 1. That's why we are discounting using PV. It's a one-time what? It's a one-time value. It's a one-time what? So in this case, this is simple. How do we get interest? We have been given interest rate, and we take that of par. So the bond, the par value is 1200,000. So 1200,000. So it will be the percentage, the rate is rating up, interest rating up. Have we been given the rate? 10%, right? 10%. So it's 10% of par. 10% of par multiplied by PV. PV part 1 minus 1 point. What is the rate of return? Investor rate of return is 8.08. Cost to be raised to -4. Here it is going for 4 years. For 4 years, divided by 0.08. Is that correct, class? Is that correct? Up to that point? Is that correct? Confirm. Just confirm for me. Just confirm. Is that okay? Is that okay? I've just replaced this formula value. Just plugging the figures. Is it correct? Is it correct? Asante. And then we add what? We add. So we need to adjust this. We need to adjust this. Just add. I just want to add. I just want to add. This is 10% over 1200,000 plus. No. I just have to multiply by 1 minus 1.08 is to -4 divided by 0.08 plus redemption value. Redemption value is the same as par value, right? Don't ever forget that. At redemption value is equal to the same as what? The par value. Redemption value, the par value, same. And you multiply by what? 1.08 is to -4. So can you give me that this figure? How about the 10% of 120 or 1.2 million? Give me this. It is good to go step by step. Step for step, in a step by step. It is 120,000. 120,000. So it's 120,000 plus times this PV farm. PV farm hapa ni ngapi? Nipatie PV farm ili niweze kuconsolidate 3.3121. 3.3121. Plus hapa itakuwa 12 times, what is the PV? 1.08 based on the PV 8%. 8%. 4 years. How ngapi? This 8% 4 years. That's how much? How much? That's money. That's money. You guys, right? 71.50. 73.50. Sasa nikiwa hapo, done. So give me this. Give me this. The value ya kwanza pale. Value ya kwanza pale ni ngapi? Which is the value ya kwanza pale. What is the value ya kwanza hapa? Yeah. 397,455. 397,455. 397,455 plus this. You know the formatting? How much? 882,035. 882,085. So what is the market value? What is the market value of the gold? The total battery. What is the market value of the gold? The total battery. Market value of the gold. Total battery. Total battery. You're getting 1279.8. 1279. So that is the market value of the gold. The market value of the gold. Market value of the gold. Any question? Any question class regarding that? Any question? Any question? Any question? Any question class regarding that? Or we are together? Are we together? Are we together as far as that is concerned? Are we together as far as that is concerned? That's confirmed. And if you are not together, let me know. Remember, this is division. You need to understand. Equal to which are changing. Equals so as another paper skill, there is a question, but I would like to get decision. Okay, they wanted us to give the decision. Okay, general of the decision. Okay, let me look at that question again and see what they were asking. Let's look at it again and see what they were asking. Decision. We got to get the decision. The current value. It's just to get the current value of the gold. So the current value, if you look at the current value of the gold is above. It's above. Okay, so I'll move aside. The current value of the gold, you see, it's just when you compare with the par value, it's above the par value. See, it's above the par value is 79,490. So that means side value what? Side value value equal to. So what do you do? What do you do? What do you do? The value is higher. You buy or do you purchase or do you sell? If the value is high, no, but just a comment. Okay, I get that answers. Yes. So when the value is more, when the market value is more, do you purchase or do you hold? No, you either purchase, you either get a hold, or you hold what you have. Then you can shares. So the demand and the supply, we say that so for our Christian aside. Okay, now I wanted to get your input on data question there about the capital budget. Now, you was saying maybe capital budget kabisa. There was a question that is testing about the same. It's this May. Is it May or November? Yeah. Okay. I think it is November. It's November 2016. So it's not this. All right. I think it's not this. Maybe you can look at that November 2016 as well. You see that question November 2016. We look at it. November 2016. Someone to share that question. November 2016. Somebody to share with us the question. We need to look at something there. November 2016. Someone to share with us that I'm trying to look at it. Look at yes, there. November 2016. Someone to share in the group. See, I want to get your input on the same November 2016. November 2016. Question number 4C. November 2016, question number 4C. Is something I want to hear from you. November 2016, let me try to share. November 2016. Page to this, November 2016. Just want to hear from you. And you just look at the question. This is FM division for alpha. FM. Okay. I want you to look at that question. The question. Let's it go. Class, you did not remind me to resume the calling, but no worries. I think what you've done is getting the initial outreach of the project, the initial outreach of the project, which you got is 2,559,000. Then you're looking at the annual net cash flow. This is annual net cash flow in this case, and our earning before depreciation tax, we got it as the incremental earning or what the new machine will be bringing over the existing machine. We have the figures. Then we have to get that we use the DTS weight, the DTS method. We have to restart first. But if we want to use the other method, we usually less depreciation part, and then we add tax, then we add the depreciation. So here we are in the process of computing the DTS. We are in the process of computing the DTS. If I look at the formula of DTS, is depreciation times the tax rate. I already have the tax rate. So in this case, I need to compute the depreciation. I know that to get the incremental BTS, I need the BTS of the new machine minus the BTS of the existing machine. That value, that will be the So I know that to get the position is the cost minus the salvage over the useful life. So when you give me the cost of this, it was 3140. Cost is that 140. The new minus salvage. What is the salvage value of the new machine? Salvage value, just check. It's given by the examiner equal value 1,000, it's going to 5. So what is the depreciation? That is the depreciation percentage. It's 1 here. What is the depreciation there? It is the depreciation 458. So what is the distance of the new? BTS of the new? Here, that was 428 times 30%. So as you can see, the position will be 128. 128. That is the position of the whole of our own existing. And what is the cost? What is the cost of our existing machine? So someone you want to wait to here 1%. What is the position there of the existing machine? Not the position, but the cost. Which cost are we going to use? In other words, which cost are we going to use? Is it the net book value or the disposal value? This is disposal value, we have net book value. Net book value are something we usually use net book value. Minus, what is the salvage value now? After valuation, there was salvage value. It's not what happened. After valuation, there was some salvage value. Got it? Was it 250? We put a salvage value. Right? Missouri, by 5 years. So can you give me the depreciation of our existing income? This is very interesting. This is very, very interesting. Income is 190. So can you get the DTS? It is 190 times 30%. So what is the DTS here? Plus 57. So incremental DTS will take that of the new minus part of the old. So what is our incremental BTS? Then you strike across 128.4 minus 57. Income 71. And we get our annual net cash flow. Net cash flow. So annual net cash flow class ya kwanza annual net cash flow class ya kwanza ya kwanza 491.4 491.4 ya pili ya pili ya tatu kawili kabisa niko na dakika ala I wanna work image to work but let's see I can borrow like 10 minutes 456 4 here almost there really 631 4 the last one so the last one 631 na mwisho 491 then you add salvage value. It will be found in the last one. Salvage value. I advise you to do this. So wakati mwingine kuna vitu naonaga student wakisahau. So salvage value ifanyie kazi hapa TCL hapa. Ukafu discontinue. So TCL salvage value of the year. Salvage value of the year. Of new income 1,000 less salvage value of the code. Income salvage value of the code that will be 250. And then you add what? What do we add? Add what? What do we add? What tunaongeza nini? Investment in what? What? 600. Ngoma ingepale utapata hapa. Nipatie hiyo. Nipatie value. Watch. sasa hivi 1400 net hour. So that will discount together and you get your what? Net unit cash flow, unit total and unit cash flow. So the first one is made 491.4. Or if the percent 5.6, 4.6, 691.4. Alafu total ya hiyo tukiongeza survey file kama TCL za kazi ni TCL. But sasa tuta discount a lot of TCL. Total hapa ni ngapi? This is 4. So 1, 3, 1. This is 6. This is that one. I wish one final value. Napata 631. So it is 1891. 1891. Now we discount. What is the discount rate? Discount rate has 10%. Right? 10% discount rate. So 10%. 10% hapa wewe unapatia 1991. 1991. Hapa 82. I'm just this 10% tumetumia mara mbili sana. 10%. 82 what? 64. 82 64. 71 what? Ni hizo. Hebu confirm kama ni hizo. 82 64. 0.71 18. Just confirm for me. I'm just trying to remember how this is. This one 180 and this one 75. Nimepoteza chakini design. Nimepoteza zile waka. 75 65 13. Haya hivi 69 60. Hapo hiyo inasema gani? Kwa hiyo 12%. Okay, no worries. Na mwisho 56 56. And then we get the total or the discounted cash flow. Discounted cash flow. For year one, you got just tata. Year one, you got it. 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 One lesson point. 62 point kidogo gani? Hakuna pewa 62 sijui 6209. Confirm somewhere here. Confirm. The PBF here 446.7. 492.3. 446.7. Next one. I hope mnapatia habari zenye ziko sawa. Nipatie hiyo nyingine. 435. Inasonga tuna zenye nipatie pale. Patia ya vizia. Hii iko correct. Na mtu niona anipatia 6209. 6209. Kama iko sawa, you continue and give me the total. The discounted cash flow. Total discounted cash flow in that equals to ya mwisho, the last one is happy. Ya mwisho ni happy. Give me the last one, or do we wind it up? 18, 71.9. Are these answers correct? That's confirm. Somebody confirm if you are having a display. Let us know. These answers correct. They are correct. Incorrect. Are they correct? Just confirm. Because now we have the final from year 4. So year 4. Asani patie hii, I know how to refer. Check PBF. PBF niambie ngapi? Tapewe ili tuweze kupata the right PBF. Check PBF ya 4. Year 4 is year 3 is 457. 457 hapa. Hapa. Chukua tuwe hizo. 68, 0.68, 6830. Hapa napewa 457.15. Haya, nipatie toto ya hii, nipatie hapa. What is the PV for these 5 years? 5 years, PV for 5 years, Chris. Really, Isabel, kwa hiyo. Ndio sana ama uko ofisini, lakini sasa uko ofisini just it's 2 so sawa. Now give me this in the total hapa. This that this. Yeah, kwanza. Year 4 tunataka na the discounted cash flow zetu ni ngapi? Year 4. Hapa hii ndio 613.04. Ina mwisho the last one. Hiyo ilikuwa hiyo yes 17. I think it can change. Year 1 I 446. So hapa yeye 6.7, so hapo sasa lazima tuangalie kwa njia 446.7 and actually we are going to 1872.7 and actually year 2 is it okay now? Is it okay now? Is it okay now? We confirm. Is it okay now, class? Today, other mistake. You make other mistake. Yes, is it okay now? Because sawa. Kama sawa, atie total discounted cash. Total discounted cash flow kama present value. So you add all this. Add. Tunapata ngapi? Total discounted cash flow ngapi? Year 4, still kuna shida. Haya, Chris wapi? Shida wapi? Nyingi mnapatia hizi. Year 4, shida iko wapi? Year 4 tafadhali 4.83. Actually, you want to give me those values. I'm checking the latest. 4.83. Sasa sawa. Year 5 is 0.5. Hapana, year 5 sasa nimekataa. Hapana, I think I need to also pick my phone there. Let me see. Kwanza when Francis, well, in 1891 and this inakuwa 0.5. Nimekataa. Let's see. I have 631.4 times 0.68, but for that one, for that one, that's not what to use. Someone is value of the for that one. Yeah, sanity. Is it correct? Is it correct? When you tap in Safa, chapter 18, and you need to check your calculator as well. Times 62. 62 is 9. This is between the you need to know how you are computing. Not on the computer dish. Not on the computer dish. I'll check. The others are correct. Are the others correct? Are the others correct, class? You may need to even confirm. Right? 456 as this. Even this one is not correct. You guys, when you confirm here 526 4 0.82 64 495, that is okay. This one 491 1.4 times 0.90 446. Yeah, that is okay. Now add for me all this. Total. What is the total? What is the total? The total. We say that this is the present value. Total present value. Ongeza hizi zote. Now I believe there's some people I need to be confirming the information before I patia values tofauti hapo. Kama nani hapa episode tufanye this. Okay, who's the total? Is the total? Who's the total? Who's the total? Hapa yoyote ongeza. We finish up. Finish up. Tunapata 28 30 into 5, 28 30 25. And to get the net present value, we got 28 30 25 minus 25 55. So what is our net present value? What is our net present value? And how do you advise this company and one kind? Which is our net present value? How do you advise this company over one kind? So I hope tuko ngapi? Viable. Hata kwa mtani nikatui viable. Then we'll look on as well. We look on that project is what is profitable. Project is profitable. I've extended a bit so that it is right. I've extended a bit. So I'd like to know whether the revision sessions were helpful. I'd like to know whether those revision sessions were helpful. Were those revision sessions helpful? Are they helpful to you?